This is Justin Pulitzer. This is my weekend review for Sunday, April 5th, 2015. Happy Easter. There's a lot to cover. On Friday, we had something unusual happen. We had a non-farm payrolls unemployment number, which occurred in an abbreviated holiday session when the market was closed. And the number was pretty junky. We had 126,000 jobs versus the expected of 246,000. We also had this is on the heels of a revision from the Atlanta Fed for 0% GDP growth in Q1. The participation rate was 62.7%, which is the lowest participation rate, I believe, since 1978. And we had also had some lower durable goods orders a couple of weeks ago. So the economic data has been rather junky, to say the least. And this was coming on the heels of the Fed removing their patient language and then saying that just because they're not going to be patient doesn't mean they're going to be impatient. My thinking is that I had said at the time that Janet Yellen had downgraded her expectations of GDP, which now turned out to be quite prescient and true. And I believe the Fed to be on hold for a while now. I think that they would need to see at least 2 to 3 sets of data before they would start to raise. So that would bring us well into the end of the year and potentially into the next. So with that as our backdrop, let's jump into the charts. As you can see, we are on a 10-year weekly of SPY. This is the 2007 crash. This is the 08 March lows. And you can see we've been in a long protracted up channel to the upside. This is a regression line that I drew in. And after the 2011 sort of debt ceiling fiasco, which brought us down, we started into an up channel within an up channel and then broke out and started to form a new up channel, as you can see, that yellow channel. This is more modern day, and let's zoom in to that. I will bring us into a 9-month daily. So as you can see, I'm going to zoom us in. These are my actual charts, so I'm sorry the charts are a little bit messy, but just focus on the levels that I discuss here, and I think we'll get through it just fine. So this has a couple of multiple time frames that I'm looking at, and the first and foremost, the important one here, as you can see, was this range breakout high, and on Friday we did close above it, but just by the hair of our chinny chin chin, so to speak. That's 206.42, and the close here was 206.44. So not a really super convincingly strong close. You can see that this also we had a break of the channel here. We refought up to get back above the trend line, and then made a lower high here off of a still lower high. Made a bit of an equal to lower low, and now a lower high again, and now we're coming in and we're set to gap down. At the lows, it was about 20 points. Now it's about 15 or 16. So that should bring us down into this area. So we're going to get to see now how good these lows are. I started to draw on a bit of a downtrend, a bit of a down channel and a downtrend within the down channel. And you can see that on our first time frame, the first 61.8 Fibonacci retracement, and that's of this move here, starts coming in down here around 203.35, and we also have a gap fill here from this move and also an old reference high at 201.90. That would also coincide with a confluence of events here. The 200 MA is coming in soon, and that regression channel that regression line that I had shown that I drew from the March 09 lows starts coming into play, and you can see it held here on this move down. So I'm starting to think that the market will start to have some muscle memory in this area. Now, it's not just me thinking this. If you take a look at the expected market maker move for the week in SPY, it's $3.40, roughly about 40 cents, $3.40. Let's call it $4. And if you subtract that from let's just say 206, that roughly gets you 202, which is this gap fill. So this to me is the downside potential, maybe with a slight overshoot, for this move this week. There's 5 days obviously in it from Monday through Friday. So Obviously it's possible that we can really start to pick up steam and come down even further, but this area I think is going to have muscle memory. You can also see in this volume profile here that it's also the difference in the distribution. You could see there's a low volume node here, and then we start picking up again down here. So I believe that to be muscle memory area. If that does not hold and we wind up coming down and being a little bit sharper, there is another trend line that comes down here near these lows around in the 198s. So I think that is potentially possible if we start to really fall off a cliff next week. But like I said, this area I think should be an important area to hold. If we lose that, we would be coming down into this range. Now, on a up move, which I haven't heard anyone talk about over the weekend, I would think that you could, if futures do something like buy back, like they strengthen up ahead of the market, and we have some type of a move where we catch people short, I would say that first and foremost, the line of resistance is this confluence of 50-day moving average and 20-day moving average up here in the 207s, which you can see is also a high volume node around 207.18 at the moment. So I think that this area here would be the first line of resistance. Then you can see I have these levels drawn in of 207.84 and then 208.97. And I've discussed in past videos that I believe this to be the upper distribution up here, this area here, with give down to the 206. From 206 down to this like 205 is sort of the middle distribution. This area really just 207.84 down to this 205.38. And then from 205.38 down to 201.90, I believe to be the lower distribution. So we're kind of hovering in the middle with potential to come down to the low. So I believe that this area would be a good right or right out type of an area for a long. So that is my opinion on SPY. There is a couple of other things I want to show you with regard to SPY on a bit of a longer time frame that might interest people. The real primary trend is all the way down here. This is not something I would even discuss or talk as being into play at the moment. But if we do soften up and this area, like I said, I like to talk on different time frames. If this area does not hold, you can see that this yellow channel that I had showed you that we had transitioned to after breaking out of the green, that channel low comes into play down by 193. And if you look on a larger time frame, on a longer Fibonacci sequence from these lows up to the highs, that is the 61.8% Fibonacci retracement, which roughly coincides here with this the lower part of the up channel. So that area would, to me, this like breakout zone again would be the level that would get tested on some type of a real cascade down lower if these lows don't hold. I believe they will hold for at least a bounce, and then we'd do something like let's say we break this down channel. Let me see what's going on here. Okay, it's not auto. Let's say we break this down channel. I think we would do something like come down to these lows. Like let's say we broke here and this didn't hold and it's a real cascade, and we'd have like some type of a throwback to retest the bottom part of this channel, and then it would be the collapse. So that's sort of how I'm thinking with regard to SPY. I'm spending a lot of time on this because I know a lot of you guys chase and play in the momentum stocks. I shouldn't say you all chase, but a lot of people I do notice lately have been chasing a bit. I know a lot of you guys traffic in those stocks as well. So just be careful with this. If you're chasing for breakouts or trying to play for horizontal breakdowns, be mindful that I'm not sure yet if this is a topping process, sort of like a transitioning from the bull market to a bear market, or if it's just consolidation. All I know is that I can go by levels and by price distributions, and when we're above certain levels, I'm more confident with longs, and when we're below certain levels, I'm more confident with shorts. So it's not to say that all is lost, that there's a bit of a deeper pullback that is potentially possible, but just be mindful of that. And when you think about stocks and when the market's in an upswing, the correlations between certain stocks and the market sometimes wane a little bit, but as we're coming down, those correlations move, particularly as it gets sharper and sharper, the correlations start moving closer and closer to 1, meaning that the individual stock isn't as strong, it doesn't necessarily matter as much as the overall market risk. And that's because of Gresham's law. I don't want to bore you guys too much with that, but if you have time, Google it. Basically, it just means that the weak bring down the strong eventually, and even the strong stocks would succumb if the market is in really strong selling mode. So with that said, let's hop into some of our other indices to see if we're seeing confirmation or not. And the first and foremost is the IWM. That has been relatively much stronger than SPY. You can see we're above the old high breakout of 120.97, and we aren't at the all-time high, but we are closer to it than we are in SPY. So I would say IWM is showing some relative strength. I think that this could be some type of a right or right out play if we get a move somewhere between the 50 and this up channel. So that might coincide when we come down here, if we do come down here, with this 201.97. So as long as we're above that, I still think you can play buy the dips. If we break, then we start getting a little bit iffy and we come down, I would say that I'd be willing to give it a little bit of give, but, if we start getting down to this 119.39 and that starts failing, then we're talking about 117.37, which is, I was sort of hoping that I could avoid talking about that. I've been talking about it since I started these videos, but those are the key levels. And this one in particular, this 120.97, particularly if it coincides with the channel low and maybe a little bit of an overshoot, like if it happens here, of the 50, that to me would be an absolute screaming buy for a right or right out type of a long. Qs. This has been a little bit weaker. You can see we came down, we rallied back up, lower high, and now we're again with a lower high and kind of banging on these lows. We're just sort of riding this trend line and into this breakout zone. So if we lose that, the right or right out type of area that I think would be in play here for a buy or a target if you're playing short would be this confluence here of the 61.8 fib and also this gap fill. So somewhere between 102.80 and 103.20 to me would be an important level. If that doesn't hold, then I think we're coming back down and we could test the backside of this prior downtrend, which is roughly around this 101.75-ish area with give possibly to 100. That would be a pretty big move, and that to me would coincide with a deeper correction in Apple in particular. We're going to discuss Apple in a minute, and I'm going to show you the bull case and the bear case, and I don't want to hint at which one I'm favoring, but we will discuss it in a moment. VIX. This is going to be an enormous tell, in my opinion, next week. We had a double top here exactly at 117.19. This, to me, is a key line in the sand. I usually discuss the 117.57 and 117.85, but since we're so close here, I think if these highs give, we would blow right through that and get to this other down channel. You can see this one has held it. We've kind of teased above it a little bit, and we've been flirting in this area, but I think if these highs break, that would have enough momentum to get the juice up to almost 19 here. So I would be a little bit careful if you're playing long and you see this 117.20 break. In that instance, I think the market is probably going to be correcting lower. If we get up to this, let's say the 19 area, and we start coinciding with that 61.8 Fibonacci area, roughly around the same time, or a trend line, then you might want to start looking at selling premium because now it's gotten expensive. So that is my opinion with regard to VIX. One of the hot, proxies for momentum has been this Biotech Index, which I had warned everyone this was I did a Sunday video. This was a Friday. I said that I thought that this had been a bit of a blow off, and we have absolutely come down pretty hard collapse. We bounced off the downtrend line. We made a lower high though, and now we're hovering around this 50. So my opinion here is that these lows, which are pretty equal, I would say, are key. If we lose these lows here, this one is 33.78. Then there is absolutely a lot of room down into this 117.37 area, somewhere between 317 and 320 area. I think this area, this is also notice the volume, where the volume picks up, the profile. I think this area would have some muscle memory. but it is also potentially possible that we do something like come back down and retest this breakout somewhere between this volume distribution of 274 and the up channel around 285. I would be looking to play this type of a snap with like put ratios, with the lower strikes being somewhere between 285 and 274. Wait for the IV spike, wait for the price spike so you can get some good juicy fills. Maybe if it does something like come down into here, you put it on. That to me would be a great play. If you snap here, you could also just play short with shares. I might do that as well. If we do something like bounce higher and take out this swing high here, then I'm starting to think that it was a false, this was just a healthy move back down, and we'd probably come back up and retest the channel high and also the backside of this prior uptrend, and that would bring us up to the 360s, like 364, 365, and we might want to fill this gap. You can see that roughly coincides with up here. So I like to give both ways, and that is how I'm seeing it. Now let's jump into let's do financials quickly. XLF. I want to show you this. This is, to me, looking like it's sort of getting ready for a move. It's going to have some decision time to make, and it had tested this downtrend. We now broke this like kind of steeper uptrend, kissed off the back, and now hovering around the 50. So to me, this could set up for some type of a right or right out play if we do come down here a little bit to test the primary uptrend channel around 2368. To me though, I would actually feel more comfortable buying on this on some type of a momentum break and take out this 2458 range to 2478. Anything above there, I think we would retest the highs. If we come back down here, this would be a good right or right out area. If we break, and this is like it snaps, it could be a flip short for a play down for this gap fill down to around the 23s. Not a huge fan of XLF. I don't really traffic in it that much, but I know a lot of you guys have been talking about Goldman Sachs. This to me looks like it's trying to break out, but with market weakness, it's it's sort of failing up near the top of the trend. To me, I would see this as being a good right or right out play down here around the 182-ish. It also coincides with this old low, so if we do something like snap this, I think we would fill up the triangle pretty quickly there. It'll also roughly coincide with the 200 MA, and that to me would be a great right or right out play for some type of a throwback to retest into this range here, closer up into the higher 180s. So that's Goldman Sachs. So drum roll, please. Let's do Apple. So I noticed something in this chart, and I was discussing Apple's boxes this week, and you can see you had one box here after it had made a high, and we were in this real choppy range until earnings, and then that broke out here. Here you had the flash crash kind of day low. It was also when you got to that 119.75, which I had discussed after we had broke here. That had been sort of my target up there, and we were in a bit of a chop range. The first range you can see was about $8.56. The second range was $15.12, this box, until we resolved higher. And so far in this one, it's $11.92. So the price action to me in Apple is absolutely normal. Very, very normal. So I could see Apple, if it comes back down, the important supports, and where I would be seeing as more of a right or right out buy, you can see right here. I always say I think Apple is the strongest when it's above its 20-day moving average. And we've been struggling. It's sort of bending back down, and we've been struggling right around that area between the 50-day as support and the 20 as sort of resistance. Excuse me. So we're a bit mid-channel here in no man's land. And I think that the reason why that this rally was weak and didn't hold was because we did not get the full retest down to the 119.75, and I keep talking about this with Tesla in particular, that we keep bouncing in these momentum stocks with buy the dippers ahead of the stronger supports, and the launch points are weaker, and that's why the rallies don't hold. Now, if we came back down there, I think that this area would potentially be support again. But for me, I would be more interested in getting long down here, somewhere around this 115, somewhere between 115 and 114, which is the channel low, and also starts getting close to this gap area. 115 also, mind you, was the flash crash day close, 115.07. So I think that Apple will set up for a long somewhere between 119.75 and 115. coincides beautifully with this area. It's also part of where this sort of down channel would collide with this. That to me would be an absolute screaming buy. If Apple doesn't do that and it does something like a move up, where would the buy be? I've discussed this before and I'll discuss it again. The Dow Jones addition, when Apple was put into the Dow, the pre-market spike high was 129.85. If Apple can't get above there, the weakness to me is it's still weak and it's vulnerable to lower. So the first level to me that's really of importance is this 127 area, and then really this 129.85. If Apple gets above 129.85, I think it'll be an easy shot back up to the old highs, and I think it could get back up to the channel here. It may even do something like punch through and get to this line, which has been in the past the sort of ceiling resistance. You can see here, I'm gonna change this drawing now to red, and you can see that line has been the kind of grim reaper for Apple. See, here it was resistance, here it was resistance. We didn't quite get there, it was resistance. So we might try to do something like push up into there, into the 140s, and that to me would then be the new, the next $10, so to speak, in Apple. So if we could take out that area, then I think that's the move higher. So that is my view on Apple. I'm currently involved in a put ratio in this. I have the 115, 110s on, and that would be actually my earnings play at the moment. I'll probably wind up rejiggering that and readjusting it at some point. And also in full disclosure, just one more thing back to SPY. I have on a put ratio. It is the 205, 202 put ratio, and it's 1/2. So if we do wind up coming down here this week, and it's not too violent, it would be a good play. I believe the break even on that is like down by 198. Coincidence with these lows? I think not. That was very well planned by me and very methodically thought through. Whether it works or not, we'll see. If we run up, obviously it wouldn't have worked. I would be looking for some type of a row short in that instance on the down channel low. So that is my thinking on SPY also again, and my current position. So Amazon. Oops. Here we go. We're not loaded. There we go. So Amazon to me is, I had thought that this stock was going to come back up here and retest the 408 high. It's still very possible that it will, and it's just been in this bit of a consolidation mode with this 50-day moving average coming in here. So you really don't want to see Amazon if you're long below. If you're long, you don't want to see it get below this like 366-ish area, which has been the support. If that happens, I would be looking to be a buyer down here roughly around where the gap sort of starts. Also the break over this downtrend line. So like 337-ish, these 50% fib, I'd be an interested seller of puts. Potentially the 311-ishes, 310, 310-ishes ones, 310 ones, because that would coincide with the gap fill and also with this trend line. So somewhere between, if it does wind up breaking with the market, down between the 337 and 325, I think that area would be good row for shares or for selling puts. I like to sell puts. That would probably be my play. If we do something now like we could also, by the way, do this with some type of a put ratio where the lower strike is somewhere down here around the 325 area. I think that would be great. I'm going to look into that. I will discuss it on the channel if I do it this week. My Twitter stream, so to speak. I'll discuss it. BABA has been a just wreck. I think that the issue for this is that it had a lot of share overhang, and it may still have people who are insiders that are selling. And I think that a lot of people who bought up here, the geniuses who were chasing, are probably taking tax loss selling now. So my thinking with BABA is that you sort of buy it down. You still buy it around 80, and then you look to pump it out sort of toward the upper part of the range. I've been looking for a 50-day moving average test, potentially with a move up to 90. I would be a seller up there. You may, if earnings happen, you may see 100 again at some point. I would think that would be a strong resistance just because this was really the real major breakdown level here. So that to me would be the play in BABA. I'm currently long shares and long a put spread. I believe I have the 84-80 half on. So if we start losing 80, I'll just bail. And it could be some type of a look below, fail, and come back up. And in that instance, I'd be back in. But I don't really have a very big position on in this. It's just sort of a bit of a tester. I've been looking to build from really for a move back up to the looking for this to be on momentum for a move back up to the upper part of the down channel. But we haven't gotten that yet. If that happens, then I'd be looking for right or right out short. But that is currently how I'm in it. These Chinese internet stocks haven't really been doing that well either. This BIDU is still within the up channel. You can see the green lines here. It had looked above here. Now we're just hovering around the lows. So my thinking with BIDU, and you can see we're struggling around this 50-day moving average, I would be more of a buyer on momentum on some type of a breakout of the downtrend and the taking out of this swing high. If that happens, I think we fill up this triangle here to 235, maybe to 237. If we break like this the channel, then I think we're in this channel, and we'd probably be coming down into the retest these lows, the 91-ish area, which was also the after hours earning gap low. I would be right or right out at 191, probably via put sales and or shares. And if it's wrong, you get out with a small loss. If it's right, you take money to the bank with a move back up to the breakdown area, which would be around 20, this candle low, 202. So that to me would be the play in the better, easier money. I wouldn't say the easier money, but the smarter money type of play in BIDU. What's next? Facebook. Facebook is typical with this pattern, this like jerky run up, this steep sell-off, the chop, this jerky run up, the chop. Here again, now we're coming back, into the breakout areas. So below 82.17 is still a little bit vulnerable for a move lower. We did hold the 20, which is good. I see if the market softens, we could come back down and retest this sort of uptrend line. It'll probably roughly coincide with the 50-day moving average. We'll see where that is. The real major high that this had broken out with was this 79.71. I'm going to make that blue. And I'm going to leave it solid just to demarcate the area. You can see this has been a big point of contention. I think if we come down there, that's a great right or right out type of a play if there's some type of an overshoot below 80. There are still some sellers up here that are trying to, make some bucks, bank their cash. I had thought we might get back up to this sort of similar thing with Apple, that, uptrend line. I thought we might get up there. But we did get a 1.618 fib extension. I had discussed selling a lot up here at 85.5. It looked above a little bit higher, and it's pulled back. So that turned out to be, again, a prescient move. I do think longer term, Facebook is going to go to 100 and higher. I think that the purchase of Instagram for $1 billion, it's already being valued by some analysts at $37 billion, was a steal in relation to like Snapchat and such. And I believe Facebook is undervalued. I think their mobile payments is going to be huge, and it's going to help their advertising platform, which I do think, by the way, is taking share from Google. We'll get into that in a minute. Let's discuss Twitter. It's hard to discuss Facebook without Twitter. And I can't type. Here we go. So Twitter broke the downtrend, but it came into some resistance of some reference levels. So 850 was an important one, you can see. 51, sort of 52-ish, I had been discussing, if you remember back in the day. 53.64 is another big one, and I think, honestly, 56 up here, 55.99, would be the absolute max it can do if the market firms up without earnings. If earnings are good, then I think we're going to see up here at the channel highs roughly around 60. If they're bad, we could do something like come back quite a bit. I've been saying I need to see 2 good quarters back to back, and the better way to play Twitter is still to be short puts. I'm long a put spread and short puts. My bias is basically long, but sort of chicken little long, if you would. If we do have some type of a pullback, I think we could easily see this 43.97 and potentially 42s. That would be this gap fill. And I don't know if we would see the channel low back down in 37s. It's potentially possible if this is bad enough. But I think that Twitter is best destined for higher. I like that new Periscope app I've been discussing. I think it's kind of revolutionary. I do unfortunately think it's going to get copied by Facebook and Instagram, and it might not be as important. then, but I do believe it's going to be very good for Twitter. I've been noticing Twitter trying to monetize a little bit more, so I think that eventually Twitter will resolve higher. FireEye. I'm looking to buy this. I'm looking to buy it somewhere a little bit lower, somewhere between this 36.85 and like 33s, somewhere between 33.30 and 36.85. So any type of big spike down, I would be a buyer in this area. You can see this was sort of the real breakout, and there was a lot of muscle memory volume down here. You can see in the 33s. It also could coincide potentially, depending on how long it takes to get down there, with a high volume node. The real volume here starts picking up down here, actually around the 34.55. So like I said, somewhere between 36.85, which is this sort of breakout gap fill, and down in those 33s, I think that area is good right or right out for either short puts, preferably ones that are lower strikes, or to buy shares and play it that way, right or right out. Gilead wound up doing the breakdown that I had discussed. We got the 95s. I discussed covering. You could see down here we filled up the triangle to that area, and now we had bounced back to the backside of the prior uptrend line and failed and came back down. I think that this stock below 100 is vulnerable to lower. Below 98, 37, and 100, anywhere in this area is a good, still to me, right or right out short. If it breaks above there, great. Maybe we get a move back up to 101. Still think the onus here is on the bulls to prove themselves. The best to me would be to buy it on a break of this downtrend line and then play it to fill up the triangle the other way up to 108s. I'm sorry, the first one would really be to trim at 105s and then maybe hold it a little bit more for 108s, where I think it would be a good actually right or right out short there. But we have a long ways to go. So if you want to try shorting here, I'm fine with that. Maybe it does something like roll back down to here to the 91, 92 area, potentially lower to the channel and coincide with these lows. Particularly if the market gets really squirrely and we do see that breakdown in IBB, we could see the 84.50. That to me, again, right or right out. I would be doing it in size here for some type of a throwback bounce to retest into like the 96 area. So that 95, 96 area. So that is how I see Gilead. Google, very naughty, broke the uptrend line. Broke down out of my 553 to 545.41 breakout range below the 50-day MA. It did it on a gap. It stopped at the 100 MA, but for me, I think that Google needs to now prove itself. It could bounce and do a throwback to the breakdown. To me, that would be a good spot for some type of a right or right out short, considering we had a double top here. I had discussed, by the way, selling 580 up here. I missed it by $3, but guess what? I bet you wish you sold there rather than being still stuck long here. So where am I thinking about Google as a buy? I think that somewhere between this 526 and this gap fill here at 513, if we can come back down into that area, then I think you can sell some out of the money puts, like down here, like the 500s or the 490s. I would love around 487 if there's enough juice. I think that area should hold for some type of a buy. The thing I think that's weighing on Google is the antitrust issues with the EU. Also Facebook and all these other social media apps starting to eat into their ad space a bit. They don't really get enough credit for YouTube, which I think is kind of kicking ass. But hey, it is what it is. It's a lot of reality is perception, and they are having some issues, I think, with people eating into a little bit of their market share. That's all. Netflix is into a area of importance. This like 412 to 419 area is an important area. We're a little bit below the 200. I'm currently long, I think it's a 390, 380 put ratio, and you can see that that's the 61.8 fib, and it's also roughly coincides with where the icon tweet was, which was 389, and this memory area. I think that would be a area. I'm only in the weeklies here. I would not be in the monthlies. I would, however, be in the monthlies somewhere down in this gap fill area, somewhere with a lower strike, somewhere between 348 and 316. If we do wind up coming down, I might book profits and re-up for the gap fill type of a play. I'm not necessarily sure we get it. We may have some type of support here between the figure of the 400, which is roughly around the 50% fib. It's also where the gap starts, and the 61.8. That's sort of what I'm thinking right now with Netflix. But, the market is a little bit squirrely. It's potentially possible that it has a deeper correction. Price line, Also, another one of these momentum names that came in, the 50% bounced it. We may see some type of a move down to the 61.8. I would be interested in maybe selling some puts down there, or playing with put ratios, even maybe better yet, for a move down back down to the channel low. You can see we got the channel high, now we're mid-channel, maybe we do get the channel low. I'm not necessarily convinced yet that that will be the case. I sort of have to think this one through a little bit more. I think that they might be having problems because of their European exposure. I know they expanded a lot in Europe, and obviously Europeans, the euro has cratered, and they probably aren't spending as much on vacations. That might be the issue, but I have no problem if you want to try playing this right or right out against the 50-day. I, though, would be more of a inclined to sell puts on dumps. I don't think it's going to be a straight shot down to here. I would be interested in doing that. I may do put ratios. I may not. I'll let you know. I'm going to play around with some of this stuff on the feed, and I'll post if I do anything. I really think the better buy would be over this to break the channel. If you can buy over this, like if it does something like this, then I believe we would fill up the channel, fill up the triangle up to about 1329-ish, that area, maybe even a little higher, but that to me would be the safer bet on a break of the down channel. You can see not all of these travel stocks, like Expedia, is at all-time highs. This thing just broke out on Friday, so I would maybe be a buyer of Expedia on dips, maybe somewhere down around this like 88 area, or somewhere around 85 if there's some type of a move down. Maybe buy a put ratio. That to me would be a great way to play it. Not necessarily going to happen though. The stock looks pretty strong. So that is Expedia. Qualcomm is one I had been talking about. I'm not really showing you this to trade it. I'm just showing you this to show you why I think the market is weak. This day, Qualcomm announced like an enormous multi-billion-dollar buyback. I think it was like $15 billion or something. Stock basically opened up on the highs near the, not even quite at the channel high, and has done nothing but collapse and crater. I'm sorry I didn't see this. I was paying attention to some other stuff. I would have been a buyer at the gap fill around 66 for a bounce to the 50, weak. You can see the 50 here has been resistance here again. If you want to play it long, above the 50 would be a move, maybe for a move back up to the channel high. I, however, would be interested in a move down to the channel low, which would roughly coincide with these lows, somewhere around 60. I think you could sell some out-of-the-money puts, maybe the 56s or something. I think that area would have some muscle memory. Tesla. I'm starting to turn on Tesla, believe it or not. I'm starting to get more bullish for the first time in quite some time. Elon Musk has now tweeted that he's got a new product to release that's non-car related. I believe he honestly does follow the stock. He saw it was dipping below this technical resistance. We have a bit of a higher low. We're coming back up over the 20. So I think if you want to play it right or right out against this low of day here, on not on rips, but I think either over the high of this day, over 92.25 for a move maybe up to the channel high around 203-ish. This is really where the prior support had been around 203, 206. I think you can play that for some type of a play where it would be a right or right out short again. Or if we break there for a move to fill up the triangle up to like 225s, or wherever the 200-day is at that point, I think to like 228, that area. I don't know if it would still be 228, but it probably, my guess is around this breakdown here, which was 220, somewhere around between 220 and 225. That could be an easy play on a short covering squeeze. If Tesla does wind up coming down and it's bearish, I would be a buyer down on this channel low, wherever that might be at the time. If it did it like Monday, it would be 147. I had drawn this a couple of last week, I think. Let's get rid of that oval. Obviously, the longer we go, the lower the channel gets, but the channel low would be a buy for me or a break of the downtrend. So I'm either looking for a right or right out short here. I'd probably actually, if we did come up here again this quickly, I'd be looking probably more for the breakout play than I would the short. But I think if you're long above this 92.25 would be okay, and below this 81.80, I think it's going to unfortunately get really bearish and probably sell off considerably more. But like I have been saying, this 177 to 185 is sort of the buffer zone for longs. Anything below there gets a little bit more iffy. So that is my weekend update. That's my story. I'm sticking to it. Be sure to follow me on Twitter. My handle is @JustinPulitzer. If you like this video, be sure to hit the like button. It helps out a little bit. I also really appreciate if you guys give me feedback. It helps me make the videos better. So let's have a good week, and cheers.